Hello, everybody. Interesting week is behind us, and I think it'll be interesting week in front of us. That is why I am speaking with David Jones, Chief Market Strategist from Capital.com. Hello, David.
Good morning.
David, I want to talk about last week and also the week that is in front of us. So let's start by saying about Fed, FOMC, statement, and also the European Central Bank meeting. What can we say about it?
I don't think we had any surprises from either the US Central Bank, as you say, or the European Central Bank last week. I think they continued their commitment to continuing to provide support to financial markets and the wider economy in the light of what's going on with the coronavirus. So we had, potentially more QE if and when we need it. We didn't see a massive reaction in currency markets. We saw the euro strengthen towards the end of last week, but it has opened a bit weaker at the start of this week. I think perhaps the ECB meeting, the European Central Bank meeting, was the more dramatic. They talked about a 12 to 15% contraction in the European economy, and of course, coming into this crisis, this pandemic, the European economy was quite weak anyway. We'd had disappointing numbers from Germany over the last 12 months. So I think the European economy is the one to watch. And clearly all economies are vulnerable at the moment, but that's definitely the most vulnerable. But I think the European Central Bank will continue doing whatever it can to try and support this economy. But I don't think any major surprises, because we have seen central banks step in over the last month or so anyway, but because of what's been going on with the spread of the coronavirus.
And how did euro-dollar react on this, as you said, non-surprise meetings?
We saw a strong finish on Friday, but currency markets have been pretty volatile. We've seen big moves day to day, but probably not much in the way of direction. We've seen the US dollar under pressure for a week and a half now. So that has been under some pressure because, again, of the massive hit the US economy is taken. But we're not really seeing a massive run of strength in the likes of the euro. We've seen the pound a bit stronger last week, but I think we're seeing, because markets don't know, I think there's still so much we don't know what our economy's going to look like in 3 months, 6 months, a year. So we haven't really got any traction in these major world currencies at the moment. So I think this week, plenty of volatility, plenty of opportunities for short-term traders. But again, I think, considering we'll talk about them in a minute, we've got the non-farm payrolls coming up, a fairly directionless week, I think, until we have a bit more information on the economy.
Okay, and looking at the capital markets, we look at the S&P 500, Dow Jones 30, or for example, DAX, EU 50. What can we say about it? How does the investors, stockholders react after this data, after the central bank meetings?
We did see a weakening in stock markets Thursday and Friday, but I think that was, again, perhaps more in relation to, I don't want to say profit taking, but how far markets had come over the last 6 weeks or so. If we look at the S&P, and if we use the S&P 500 as perhaps a benchmark for these other markets, we've seen the S&P rally by more than 30% since the March lows. So clearly it fell really heavily. All stock markets fell really heavily, but we've had this incredible bounce back, this incredible show of strength. And I just think that perhaps these central bank meetings, and again, restating their concerns about the global economy, maybe made investors remember the reality out there. So we did see some quite heavy falls in US markets on Friday. That's fed through to European markets today. And in the overnight market ahead of the US Open, we're seeing futures down again. When I last looked, I think the Dow was down maybe around 200 to 300 points. So we are seeing markets under pressure ahead of the US Open. And I just think after the massive rise we've seen with concern about these payrolls coming out this week, perhaps some of the best of the recovery for now is behind stock markets. So I think we could have, it's going to be an interesting week, but I think it could be a volatile one. And I think with markets and stock markets under pressure towards the end of last week, it's going to be a much more nervous environment for investors in the days ahead.
Non-farm payrolls this Friday. What are the market expectations?
A massively negative number, which I don't think is going to surprise any of us. You know, in excess of 20 million job loss. We know because we've all seen, I think, the weekly unemployment claims in the US. I think since the virus really took hold over there. So I think is it minus 25, 26, something like a very big number, obviously in excess of 20 million. It's something like, I think, almost 30 million have filed for unemployment claims since this virus really took hold. So it's not going to be a surprise. Everyone is expecting a really negative number. We get used to seeing volatility over the non-farm payrolls. So I expect we're going to see that again, but I wouldn't expect it is going to shock markets because we've had a running commentary week by week on what the US economy looks like, and we know it's not good. And I think for plenty of these world economies, that the question is not so much, well, what's unemployment today? Because we have actions by governments and central banks to support economies. For example, in the UK, we have effectively the government paying the salaries of lots of workers. I think it's when that support is taken away, I think that's when we're going to see the real impact of employment and unemployment as a result of this virus. So yeah, it's going to be a monumental history-making non-farm payrolls this Friday, but that massively negative number is not going to come as a surprise to the markets.
Okay, so employment data is one thing, and the second thing is the central bank meetings. In this Thursday, we have a Bank of England meeting, and are you expecting any surprises from the central bankers?
No, I think not too much. I think the only question is, does the Bank of England go further in its support via quantitative easing, you know, via effectively printing more money? Does it go further again than it goes already? We've already had the Bank of England drop interest rates, like other central banks have. Here in the UK, interest rates are now, the bank base rate is 0.1%. That is the lowest since the Bank of England has been in existence. So again, we have unprecedentedly low interest rates. So the only question is, do they do more to what they've done already? In effect, they announced they're going to print, you know, we'll have more quantitative easing, but no real surprises. I think because central banks had to act so quickly when this crisis really spiraled, these monthly meetings, at the moment at least, don't have anywhere near the same levels of significance. So no real surprise from the central bank. What will be watched is what they say about the state of the economy. And I think at the moment, nobody really knows, I think, as I've said, what these economies are going to look like in 3 to 6 months' time. But I think, as with the Fed last week, as with the European Central Bank last week, it's what the Bank of England says, its feelings, its forecasts for the future of the UK economy that will have, I think the bigger impact on markets.
The one thing is the recession. The second thing is what the central bank will do. But the first thing, I think that it looks like the investors or traders forget about it, is the Brexit. Because in about 4 years, we had Brexit. And now the main topic is coronavirus. But the question is, do you see that something will change looking at the Brexit whole situation, or maybe it's not that interesting for the investor because the main topic is coronavirus and the British economy?
It's a really good point, Chris. You know, as you say, for years, that's all, not all, but that was massively dominating the conversation about financial markets, particularly, of course, in the UK and Europe. And I think what is a relief to many of us, but for the wrong reasons, we don't hear so much about Brexit now. A deal still needs to be done by the end of this year with the European Union and the UK. There have been, noises in the last couple of weeks about we need to get back to these negotiations already, not necessarily related to Brexit, but already farmers in the UK are saying when they normally have quite a bit of foreign workers harvesting crops and all of that. It's that time of year in the UK. We don't have that, so there is concern about how that's going to affect the farming industry. Is it going to affect the food supply chain because we don't have the workers? That's very much a localized problem where we normally in the UK rely on foreign workers for that sort of work. So that's an immediate problem. But I do think, during the summer, they will need to sit down and have these conversations. I think we've seen meetings so far with no progress. But as ever, the clock is ticking. Coronavirus has taken over. We've got, in a week's time, I think next Sunday, the Prime Minister Boris Johnson is going to talk a bit more in the UK about what we're going to do about the lockdown here. So perhaps if we see a change of focus from that, we'll get back onto Brexit, because it's definitely an issue that needs to be resolved. But as you said, it's almost understandably being ignored by investors and traders at the moment because there are much bigger things to worry about.
Thank you very much, David, for this conversation. My guest and yours was David Jones, Chief Market Strategist, Capital.com.
Thanks very much.